Place where the Federal Reserve's rate cuts are playing out according to script, the housing market. The Fed's first two cuts this year helped stabilize the market, which had been heading for what a lot of people thought was a major slump. But with rates already low, will the latest slash do much more for the sector? With us now to discuss this is Bess Freedman, who is Brown Harris Stevens CEO, and you're on the front lines of this. We know there's a lot of refinancing that's been going on with the rates coming down, but it's a buyer's market in a lot of the country. What can you help us understand about where this is headed? Still a buyer's market, or is it going to shift?
You know, my prediction is that it's going to remain a buyer's market. I think it's a very price-sensitive, value-driven market, and we still have a lot of oversupply. And so because of that, buyers are in the driver's seat right now.
And what are sort of besides the oversupply, what are the dynamics that are supporting that, and are they going to remain in place?
Well, you know, unfortunately, I can speak specifically to New York City.
Go for it.
We have a lot of sellers who are still not facing reality, and we talk to them all the time, and their prices are here and buyers are here, and they have no motivation. There's no catalyst for them to go in there and negotiate if they think their prices are way off the mark. And so you have this glut of supply, and you have buyers who are kind of like, ooh, what's gonna happen? Are they gonna cut rates again? Is there gonna be more room to negotiate? So they're kind of taking their time. So,
when they cut rates, though, doesn't that artificially inflate prices?
I think it does, and I don't know that it necessarily helps our market. You know, naturally, we kind of want to let things kind of, you know, go through the market and see what happens. And when we cut the rates, I think that buyers don't know what to expect. You disagree?
No. I was just giving him a look.
I was thinking, if you want to get in on this, but this issue of asset prices. I realize we're talking about New York, but this plays out across the country. Lower rates are driving up housing prices in Nashville. Nashville's a hot city too. A lot of people moving there. And how do you maintain the balance? Where do you get back into the right equilibrium so that you don't have a buyer's market or a seller's market? Is it Fed-driven? Is it supply-demand driven?
I think it's a mixture. It's not one or the other. I think it matters. You know, if you have a nice balance of things priced right, rates are good, morale is good, all those things, then buyers have the inspiration to make purchases. But when it's the other way around, then they wait it out. So I think you said Nashville is
Yes.
a place. Well, those are probably, the supply is probably level with what people what they're looking for. So
what is the tax dynamic? You know, how is it comparable between, say, a Connecticut, very high tax state, New York City, high taxes, whereas Florida, very low taxes? Are you seeing a change there? Is it hard to sell houses in Florida?
There's one high-profile change.
And he didn't pay taxes in New York, so.
Well, we are seeing this sort of a bit of an influx of, you know, people from New York are migrating to Florida. We've seen that historically, but even more so lately because we're facing these headwinds with these new tax laws, which are not ideal in New York. But you know, I think that that's not wonderful for us, and we'd like to see those things kind of switch a little bit. Like there's this pied-à-terre tax looming in New York, which we really would like to go away. It does not help our market at all.
So let's look again, New York City. You talk about the tax situation, but that's true for a lot of places. But it really only hits the upper end, doesn't it? I mean, we're talking about the luxury sales. What about at the entry level? Are those people being able to come in?
Yeah, I mean, those people are being able to come in as well, but it does impact everybody. I think it impacts, I mean, New York is known as this market that's sort of high-end, super expensive. You see these luxury condos, those big sales, they get all the, you know, publicity. But the reality is that the regular, you know, people are buying $1 and $2 million apartments. That's really like the everyday people that are living in New York City. Those are the sales that are more regular than what you see in the newspapers all the time.
So having been in the real estate business, what tends to change the dynamic typically?
I mean, you need to have, obviously, sellers need to adjust their prices so that if they adjust them, then buyers are more motivated to negotiate, and then supply gets kind of shrunken a little bit, and then, you know, we want to get back to where there was a bidding war. You know, the times where things were like, you know, where, buyers were fighting to get into open houses, you had multiple offers, and we still have that when something is priced right or there's a trophy apartment that hasn't been on the market for 20 years and everybody wants it and they're willing to overpay when there's nothing else like it. And that is everywhere. So I think I'm optimistic, although I would love for sellers to keep adjusting their prices.
All right, we'll see if they do. Bess,
Yes.
thanks for being here.
Thank you
Bess
guys
Freedman
so
of Brown
much.
Harris Stevens.
Thank you.
She's the CEO. Thanks.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.